very warm welcome. You're watching a fresh episode of Your Trades on ET Now. This is Priyanka Uppal and along with me is Sneha. Next 20 minutes, we track you through all the key developments of the day and we set you up for tomorrow also. But then clearly the day saw a lot of reasons. Maybe Indian markets were tracking the global weakness. It was expiry moves and of course maybe investors are refraining from taking big bets ahead of election outcome. Reason, and of course there's one more reason, but because we've seen the globally also bond yields have inched up higher. That also continues to exert pressure on equity markets, and this entire gloomy sentiment which was there in we tracked the US markets, Asian markets also tracked the losses from Wall Street, and it looks like Indian market also that gloomy sentiment continued to spill over to Indian markets also. We did regain in the last minutes to close above 22,500. Bank Nifty and Nifty both of course were in pressure today. Two top sectoral losers were metal and IT. Metal lost nearly 3% today, led by losses from Tata Steel, Hindustan Copper. Bank Nifty fell around about 350 points from its day's high. IT sector was nearly 2% down. And the Pharma, of course, was a third loser, wherein the losses came in around about 2%. In fact, very surprisingly, Snehi, what we saw that good numbers also, the stocks which posted good numbers also did not cheer the street. GMR Infra numbers were good. Company reported lesser loss as compared to the previous quarter. In fact, on Y&Y basis also, but it was again one of the top loser on the bourses today. Cummins, Tata Steel, we did not see any movement, any good news also being tracked by market participants today. Maybe the entire overall sentiment, be it the global sentiment or before election, the nervousness or maybe the expiry, these could be the reasons. But of course, there were a couple of news. Of course, there was one news which impacted the stock edelweiss, wherein there were some RBI restrictions. Couple of block deals which happened today was IRB Infra, RR Kabul and KFin Tech. So a lot of other movement also making.
Absolutely, lots of stocks to watch out for and lots of reasons also, right? Like Priyanka mentioned, we did see a deep shade of red coming across our screens today when it comes to the markets, and stocks, like she mentioned, reported good numbers, did not do very well as well. But one stock that did brilliantly today amid such a tempered market was Emami. That's a stock soared on the back of good numbers, on the back of positive management commentary coming in, wherein they've said that they're eyeing double-digit revenue in the first half of FY25. You have brokerage notes coming in from Goldman Sachs. They've maintained a buy rating, hiked the target price to 640. Antique has also upgraded from buy to hold, hiked the target price to 616 from 527. So, well, good moves coming in over there as well. Real winners today, though, the private banking space, because very, very good moves coming over there as well. Nifty Bank, amid a market like this, held on to the green. You had ICICI, Axis, IDFC, Federal, HDFC Bank. All of these have held up pretty smartly in today's trading session. On the flip side, metals were your biggest losers today. Hind Copper, Tata Steel, APL, Apollo, NMDC, Vedanta, SAIL, Nalco. All of these were on the losing side as well. But also, let's take a look at some other stocks that were major winners and losers when it comes to today's trading session. RHI Magnesita did pretty well, up 10.5%. Linde India, KNR Construction on the back of a good set of numbers. Paytm continues to be locked in upper circuit for the second day. Triveni Turbine, ITI, Page Industries, Interglobe also held up pretty smartly in today's trading session. Flip side, big losers, IRB Infra, you have KFin Tech on the back of block deals like Priyanka mentioned. GMR Airports, Hinzing, Cummins India, Hindustan Copper, Alchem on the back of poor numbers. And Tata Steel also, despite reporting a good set of numbers, that stock was down as well. Avantel was up 7.6%. They bagged a good order from the Defence Ministry. SJVN down 3.5%. Alchem down 5.3%. So that's the wrap on the trading session that we saw today. Quite the volatile day coming in. But to make more sense of what we saw today and what we can expect to see tomorrow across when it comes to the markets, we have with us joining us Kunal in the studio. And Kunal, thanks for joining us. Big cuts today coming in, lots of pressures like Priyanka mentioned, global pressures. You had expiry today, you know, exit polls are due, election outcome is due. Amid a market like this, what does one do and what can we expect to see tomorrow?
Yeah, you sit and enjoy the show, you enjoy the selling also. So I think that's also a good strategy to have. And, you know, most of the factors you mentioned, you know, US selling or the selling which has been across the globe, expiry, event, kind of management in terms of portfolios. I think all of these reshuffling, all of these requires reshuffling of portfolios, taking some risk off. And I think that's what the markets have been doing over the last few days. Today, of course, being the expiry, the intensity was pretty much high because traders had to close on to their positions, or in case if there was any kind of a rollover activity that had to be culminated today. So I think on that front, the markets were a lot more choppy. But we look at this in terms of the broad sense that the Nifty is still holding on above its 50-day moving average as a key short-term support. 22,300, 350 is the 50 DMA support for the Nifty. And I think on the front, Bank Nifty has managed to outperform today, holding on to that 48,500 major support. So I think on the back of this, we can expect that the markets may get back into a stable upfront. What we also need to watch out for is that post-event, the India VIX typically tends to drop down. So now from a level of 24, 25 approximately, if we get down to that level of 15, and assuming if the market reaction is positive, then we could be looking at much more continuation rally for the indices going forward.
Okay, Kunal, but then one very interesting fact is that banks did not lose its, they were holding on to their ground. In fact, they've held on to their 20-day moving averages support also. And all the private banks, you see, large cap names, and essentially they're all FI dominated stock also. But then we see that they have stood tall. What can we make it out? The banks can shine from here, though the bond yields are higher.
See, what happened is that there were two pockets of market performance. One was underperformers, and like the private sector banking names, and the other was strong outperformers, metals, commodities, PSUs, etc. And there was unwinding of positions on both fronts. So for example, from the underperforming names, where there was slew of short positions, and you saw covering of short positions for many of the stocks. The private sector banking names, likes of HDFC Bank, for example, all of a sudden start to get into an outperforming or a stable uptrending mode. You saw many of the mid-tier private sector banking names, IDFC First Bank, etc., also showing signs of strength. That generally happens when you see short covering across for many of these underperforming names. On the other hand, you saw the performing sectors, metals, commodities, PSUs, banking stocks, PSU banking names, etc. They were the ones which are at receiving end broadly over the last 3-4 days, and that's why, because traders who were sitting on good profits, they want to trim out their positions, at least try and reduce the position size and then get back into the line. So I think that's what the market's positioning have been.
All right, Kunal, thanks for that view coming in. But a market like this now, what are your picks? I believe it's a stock-specific approach going ahead?
Yeah, it's a stock-specific approach, but you still have to go with stocks which are stable as well as uptrend. So I'll go with two buy calls. Sonacom Star is the first stock which I would suggest as a buy. Interestingly, the stock just last month was trading below its 200-day moving average, has made a very strong comeback. Today, I think it's on the verge of a breakout, about its 50-day moving average also. So it's been a very good recovery for the stock, expecting this to be a very strong recovery candidate going forward. Targets of 688, stop loss could be kept at 618. And the second would be a buy on Oberoi Realty. This has been apparently one of the few real estate names which is still holding on to its price uptrend. So trading at 1800 plus levels looks attractive for a target of 1900. Stop loss could be kept at 1800.
All right. Thanks very much, Kunal. We'll let you go on these two stocks. Thanks very much. Well, let's go ahead. Let's go across to Srishti. She's tracking some more stocks for us. Srishti, tell us, is it a combination, or because very handful of the names which were in green today, you've got breakout stocks or breakdown stocks for us?
So actually, for today, two of the counters are on the breakout side, and we're just highlighting the technical setup for both of these stocks because they're already quite beaten down names. First up is Wipro, because as you can see, the stock has been in a continuous downtrend, and what we have seen is that the support of close to 440 rupees was also broken in today's trading session. Other than that, there was also a rejection exactly from its 20-day moving average, and needless to say that there were shorts getting added into the system. So this is the first stock that we wish to highlight. On the breakdown side, this Wipro has been one of the laggards in the whole IT space, and today once again the stock was seen to be under pressure. Moving on to the next counter there, and that too is on the breakdown side. If you will see the charts of Hindustan Copper, though the stock has seen a phenomenal run up on the upside, you will see that from close to 250 rupees the stock made a run up to close to over 400 rupees actually, but then a big sell off happened, and when actually such such a strong candle is being formed, this is actually followed by some of the other selling days as well, and exactly what we are seeing on the chart of Hindustan Copper, because the stock did face rejection exactly from its 20-day moving average. Other than that, support is once again retested by this particular counter, and hence we are just spotting this counter on the breakdown side. So these are the two stocks that we wish to highlight on the breakdown side. Back to you guys.
All right, Srishti, thanks so much for taking us through both of your picks on the technical side. But let's take a look at the big event that's lined up ahead of us, exit polls as well as the election outcome. And apart from the market largely pricing in policy continuity, it's important to take stock of what happens after elections are out of the way. Where are the markets headed after, and what should be your strategy? Let's hear out the opinions from Ramdev Agarwal, Mark Mobius as well as N. Jayakumar.
Post-election is going to be a very interesting time. And if markets are corrected by 10-15%, I would think let the market correct by another 10%. So that absolutely is like it's a ground zero. And then we start with a new administration and new thought process, new 100 days, new ambitions of the government, new ministers, and they will come and run for their targets and things like that. And then the new energy in the economy will also come. So at that point of time, markets will also accelerate to the new highs. Most of the people in the market, they should also get reconciled to 10-15% correction. And once that is there, you're reconciled to that and you buy the good stuff, high ROE, high growth at reasonable P, you do well.
There's no question there will be a correction. The market has gone up so far and so fast and for such a long time. We are due for a correction, and a correction of 15 to 20% is normal. This may be on the back of the election. If there's disappointment about what Modi's election results are, you may see correction. But that does not deter from the overall growth that we're seeing in India and the recovery. So if there's such a correction, it would be a great time to be buying.
The big story is that the importance of the FI flows have waned quite significantly and will continue to do so. And while they may have cut their shorts, it doesn't mean much. In fact, if anything, I feel the market structure is favoring a correction immediately post the elections when the event is out of the way, because every scenario has been factored into this run-up. And while there is no one who really has a clue on the numbers as complex as they are, in terms of making a guess, my own assessment is that if continuity is the way forward after the elections, then we'll probably have some kind of a correction.
All right, let's move forward to the big story of the day, wherein a report has come by, that's the RBI annual report, and it talks about a lot of things. In fact, RBI annual report, there is this figures for the FY24 wherein net income was 2.11 lakh crore versus 87,000, and the size of balance sheet also rose by 11%. Ankur gets us all the detail of the highlights of the annual report. Ankur, over to you.
Yes, sir, this annual report has all the answers why Reserve Bank of India transferred such a hefty dividend to Government of India. Now, as far as balance sheet of Reserve Bank is concerned, it has swelled by 11% to over 70 lakh crore. Now, it has reached to around pre-pandemic level. If you talk in terms of percentage of GDP, it is over 24.1%. Last year, it was 23.5% of GDP. But interesting aspect is that the income rose by 17%, but its expenditure decreased by 56%. Now let's get into details why it has happened. While all other like-to-like are showing similar kind of items, but one aspect is that this time the provisions have reduced in the balance sheet of Reserve Bank of India, and therefore the expenditure has reduced to 56%. Now the surplus transfer, which has been over 2.1 lakh crore, it is almost equal to the net income which has been posted by the Reserve Bank of India this year. But the benefit of which Reserve Bank has got, it has got from several aspects which is mentioned in the balance sheet. It includes gold, it includes the income which is earned through the currency. So all in all, healthy balance sheet by Reserve Bank of India, and it gives all the reasons to transfer such a hefty amount to government this time of over 2.1 lakh crore.
Alright, Ankur, thanks so much for that detailed explanation on what the report holds and why it justifies that big dividend transfer that we did see coming in from the RBI to the government. But viewers, on that note, we'll slip into a very short break on this edition of Your Trades. More on how the day panned out when we return. Hi there, welcome back. You're still watching Your Trades on ET. Now let's take a look at how the derivatives segment of the market snapped up today, or how that wrapped up for the day. And let's first talk about where Nifty has shut shop. That we've closed below that 22,500 level. So in reference to that, let's take a look at how the FNO space has heated up today. And the trend for the index futures, then trend for Nifty, we're seeing some short build up on the Nifty, understandably so, given the move that we've seen on Nifty today. But trend for Nifty Bank on the flip side is a long build up, indicating a bullish note coming in from the market, a bullish sentiment on the Nifty Bank. India VIX, however, was flat for the day but continues to be above 24 at around 24.2 thereabouts. And let's take a look at what active calls and active puts we saw in the trading session today. For the 27 June expiry, which is now the next monthly expiry, active calls were being written at 22,600 as well as 22,700, making 22,600 the next resistance level to watch out for. On the flip side, in terms of active puts, we did see some put buying happening at 22,500 as well as 22,400. So well, those are your key levels to watch out for when it comes to the index, keeping in mind the 27 June expiry.
All right, the trend seems to be changing for banking stocks, that means from the derivative space. But then let's get you the big story of the day, and the big stock happens to be Emami. Couple of brokerage notes here, buy calls pouring in from Goldman Sachs, Antique, Jefferies, and all have cited that the positive surprise comes in from the Q4 volume growth. And Emami did so today in the trade, and in fact the targets are also, we have up on the screen, earlier targets have been revised from Goldman Sachs, earlier target of 560, but now the brokerage has revised it to 640. Same goes for Antique, who has hiked the target price to 1616 from earlier target of 500 plus, and Jefferies has also revised the target upwards to 630 price. All right, and in fact, we did get to hear some comments also, an upbeat commentary coming in from the management of Emami. NH Bansali says they expect the robust growth in FY25, and which will be volume-led. Let's listen into what he exactly said.
We feel that there are very valid reasons for us to be very optimistic, and this has proved well. On the top of it, the summer has been so good, though winter was delayed and so had an impact somewhat. And the monsoons are also expected to be good going forward, and so we are very upbeat and we believe good growth has to come. For the next FY25, we believe double-digit growth is doable, and we are eyeing for that. And most of it would be volume-led. Only the price-led growth would be around 2.5% to 3% max.
Well, that's the word coming in from the management at Emami. But let's talk about a stock that was in focus today, Nifty 50 company, which came out with its numbers yesterday post-market, and that was Tata Steel. While they delivered a strong set of quarter four, the stock did not be seeming to reflect that, because that stock was lower by almost 5.8%. Almost 6% lower, deep in the red today. We caught up with the CEO and MD, TV Narendran, to understand the strategy in the current fiscal on their UK as well as the Netherlands business and the outlook going ahead. Hear out what he had to say.
In the UK, you will see two tough quarters, which is Q1 and Q2. But in the end of Q1, in June, we plan to close the first blast furnace, and in September, we plan to close the second blast furnace. And after we do that, you will see UK also in the positive in the second half of the year. So this year is going to be a very crucial year. Turnaround in Netherlands. Last year was a loss. This year will be a profit, at least at an EBITDA level. And the UK second half, we hope to move from a loss-making facility to at least a balanced facility.
Tata Steel apparently was a top loser also for the day. But then let's go ahead and an economic data, important economic data, which is slated for tomorrow. India's GDP for the fourth quarter is all set to come out on May 31st. And what is expected out of it? Anisha is here with the trend and the expectations. Anisha, over to you.
If you just talk about Q4, the expectations are on the weaker side. It's a broad range that we have. Numbers are from 6.2% to 7% plus, because SBI Research, for instance, is expecting that the GDP in Q4 could be a real surprise at around 7.2, 7.3 thereabouts. But the rest of the consensus seems to be towards that 6.7, 6.6% mark. Because in the quarter gone by, there was a bit of a weakness when it comes to the manufacturing as well as the services sector. So both of them were fairly muted. There was muted contribution from the agri sector as well. And most of the economists believe that this is going to be one of those quarters wherein we'll see a weaker number, because if you look at the rest of the 3 quarters, we were doing a better than 7% growth, but this quarter might be muted. But just listening into the commentary that we've got off late and the commentary coming in from the RBI, there seems to be a bit of a risk in my mind that there could be a number which is potentially better than 6.7, but the consensus as of just a few days ago was around that 6.7% thereabouts, and that will have an impact in terms of the rate cut cycle going forward as well, and what happens to the RBI decisions. But for now, this is what we are expecting, a growth rate of around 6.7, 6.6% in Q4 FY24.
All right, Anisha, thanks for taking us through that. Well, lots of numbers expected. Priyanka, tomorrow, GDP from India. You have the personal consumption from the US, CPI from Eurozone. You have PMI from China. Lots and lots of numbers expected tomorrow. So, well, we'll just have to see how that pans out for us. But, well, with that, it's a goodbye from Priyanka, me, and the entire team that put this show together. Thanks so much for watching.
If you like this video, then like, share and subscribe to ET Now.